Goldman Sachs says SpaceX will make $322 billion from AI by 2030. From a rocket company in 5 years, that's not a forecast. It's a sales pitch. And I'll show you the one tiny number that exposes the whole thing.
Goldman Sachs just told investors SpaceX is going to generate $322 billion from AI by 2030. That's not a typo. $322 billion. From a rocket company. In 5 years. Here's why that number should make you deeply suspicious. We are living through the most aggressively optimistic IPO environment since 1999, and the banks running these deals have a financial incentive to make the numbers look as big as physically possible. Goldman Sachs stands to collect hundreds of millions in fees on an $86 billion capital raise. When the guy selling you the car also writes the Carfax report, you read the Carfax report differently. Stay with me through this entire video because by the end I'm going to show you the one number buried in Goldman's own model that actually exposes how shaky the whole thing is. It's not the $322 billion headline. It's a much smaller number, and it tells you everything. So let me set the scene. SpaceX filed confidentially for an IPO that could value the company at $1.78 trillion. For context, that would make it one of the 10 most valuable companies on Earth on day one of trading. Goldman Sachs is the lead bank. And Goldman's pitch to institutional investors, shared verbally during the roadshow, which is the kind of thing that happens when you don't want a paper trail, projects that SpaceX's AI division goes from $3.2 billion in revenue in 2025 to $322 billion in 2030. That is a 100x increase in 5 years. Not 10x. Not 20x. 100 times. I've been watching tech projections for a long time. I called BS on WeWork's claim that its TAM was every building on Earth. I called BS on Uber's 2019 S1, which projected that it would eventually capture 14% of global vehicle miles traveled. Both of those numbers were designed to distract you from the actual unit economics. This Goldman projection has that same smell. Let me break down what we actually know, what's plausible, and what is pure financial fiction dressed up in a suit. First, the foundation. SpaceX's AI division is Starlink, plus whatever compute infrastructure they're building around it. Starlink ended 2024 with roughly 4.6 million subscribers paying somewhere between $120 and $500 a month depending on the tier. Do the math on the low end. 6 million times $120 times 12 months is about $6. $6 billion annualized. Goldman's own figure of $3.2 billion for 2025 AI revenue is actually conservative relative to Starlink's current subscriber trajectory, which tells you Goldman is not counting Starlink consumer broadband as the AI revenue. They're counting something else. Something that barely exists yet. SpaceX has been building out what it calls Colossus, the supercomputer cluster at its facility in Memphis, Tennessee. Elon Musk said in late 2024 that Colossus had 100,000 NVIDIA H100 GPUs running. If you price GPU cluster time at roughly $2 to $3 per GPU hour, 100,000 GPUs running at even 60% utilization generates maybe $1 billion a year in compute revenue. That's not $322 billion. That's not even in the same county as $322 billion. So where does the other $321 billion come from? Goldman's model, according to the Financial Times report, assumes SpaceX scales its AI and compute infrastructure to capture a meaningful slice of global enterprise AI demand. The logic goes, SpaceX has low-latency satellite connectivity through Starlink, it has Colossus as a compute backbone, and it can offer AI inference and training services to enterprises who can't get fiber in the ground fast enough. SpaceX becomes, in this framing, the AWS of space-connected AI compute. Actually, scratch that, here's what really matters about that framing. AWS took 18 years to get from launch to $90 billion in annual revenue. Goldman is projecting SpaceX AI does more than 3 times that in 5 years from a standing start. Amazon had the retail business and the customer relationships and the brand trust before AWS became a thing. SpaceX's enterprise AI sales team, as best anyone can tell from the outside, currently consists of a handful of people. You don't go from that to $322 billion in revenue in 60 months. Now here's the complication that almost nobody in the mainstream coverage is talking about. The GPU supply chain is the constraint nobody in Goldman's model seems to price correctly. To generate $322 billion in AI compute revenue, SpaceX would need to operate one of the largest data center footprints on Earth. We're talking about something in the range of 5 to 10 million high-end GPUs, or their equivalent in whatever next-generation chips NVIDIA, AMD, or custom silicon providers are shipping by 2028. NVIDIA's total data center revenue in fiscal year 2024 was $47.5 billion. The entire world bought $47.5 billion worth of NVIDIA data center chips in 1 year. Goldman is projecting SpaceX alone generates $322 billion in revenue from a business that requires those chips as inputs. You can't sell more AI compute than the world produces AI chips to power. The arithmetic doesn't work unless SpaceX is somehow capturing more than half of all global AI infrastructure spend and running it at margins that don't exist in any comparable business today. There's also a competitive reality check that the roadshow pitch conveniently omits. Microsoft has committed $80 billion to AI infrastructure in fiscal year 2025 alone. Google is spending north of $75 billion in capex this year, most of it on AI. Amazon Web Services is not sitting still. Meta is building a 2-gigawatt data center complex in Louisiana. These companies have existing enterprise relationships, existing sales forces, existing compliance certifications, and a decade head start on SpaceX in cloud and compute services. SpaceX is going to elbow past all of them and generate more AI revenue than Microsoft's entire Azure business? By 2030? I want you to ask yourself something directly. When was the last time a company that didn't exist in a market in 2025 became the dominant revenue generator in that market by 2030? Not a scrappy startup that grew fast. The single largest revenue generator. In a market with Microsoft, Google, Amazon, and Oracle already dug in. The real tell, though, is something even more specific than the revenue number. And this is the thing I promised you at the start. Part 2 is going to show you the margin assumption Goldman buried in their model, which is the number that makes the $1.78 trillion valuation either defensible or completely made up. Goldman's verbally shared model, based on what leaked to the Financial Times, implies a valuation of $1.78 trillion on projected 2030 revenues of $474 billion total. That's a price-to-sales multiple of roughly 3.75x forward revenue. That sounds almost reasonable until you realize the $474 billion revenue figure is not being discounted back to present value with any serious risk adjustment. Goldman is essentially saying, trust us that SpaceX hits these numbers, and then pay today for the company that exists in 2030. The margin assumption embedded in that is where it gets wild. For a $1.78 trillion valuation to make sense on a traditional earnings basis, SpaceX needs to be generating something like $80 to $100 billion in net income by the early 2030s, assuming investors apply a 20x earnings multiple, which is already generous for a capital-intensive infrastructure business. $100 billion in net income on $474 billion in revenue is a 21% net margin. Microsoft, the most profitable large tech company on Earth, runs about 35% net margins, but Microsoft doesn't have to launch rockets to deliver its product. SpaceX's core launch business runs on liquid oxygen, methane, and machined steel. Margins in aerospace are historically 8 to 12%. The AI division would need to subsidize the entire rest of the company at margins that only pure software businesses achieve, and SpaceX's AI business is not pure software. It's compute infrastructure, which means power bills, cooling systems, hardware depreciation, and fiber interconnects. Okay. So the number is aggressive. maybe absurdly so. But here's what you actually do with this information if you're thinking about whether to put money anywhere near a SpaceX IPO. Step 1. Separate the Starlink business from the AI projection and value them independently. Starlink at 4.6 million subscribers growing at 30% annually, which is its rough current trajectory, gets to maybe 16 million subscribers by 2029. At an average revenue per user of $200 a month, that's $38 billion in annualized revenue. Apply a 5x revenue multiple, which is what satellite infrastructure businesses trade at, and Starlink alone is worth roughly $190 billion. That's real. That's grounded in subscribers you can count. Step 2. Look at SpaceX's launch business separately. They launched 134 rockets in 2024. No other launch provider on Earth is close. United Launch Alliance, which is a Boeing and Lockheed Martin joint venture, does maybe 6 to 8 launches a year. Rocket Lab does around 20. SpaceX has essentially cornered the orbital launch market and is in a strong position to corner the heavy lift market with Starship once it's fully operational. A Falcon 9 launch costs about $67 million. A Starship launch, once it's flying commercial payloads at scale, could cost $10 million or less due to full reusability. The margin expansion from switching the launch manifest to Starship is real and significant. This part of the business is worth something substantial, probably $150 to $200 billion on its own. Step 3. Apply a venture-style probability-weighted bet on the AI compute story. Not Goldman's $322 billion. Something sane. If SpaceX captures, say, 2% of global AI infrastructure spend by 2030, which would be a huge achievement given the competition, and global AI infrastructure is a $1 trillion market by then, which is the high-end consensus estimate from firms like McKinsey and IDC, that's $20 billion in AI revenue. Apply a 4x revenue multiple. That's $80 billion of value. Optimistic but defensible. Add it up, $190 billion Starlink, $175 billion launch business, $80 billion AI optionality. You get to roughly $445 billion. That is a serious, well-run company. It is not a $1. 78 trillion company. The Goldman valuation is pricing in a future that has maybe a 5% probability of occurring on the timeline they're describing. Now for the advanced insight that most retail investors and even a lot of institutional investors are going to miss completely. The $86 billion capital raise structure is itself a signal. SpaceX is not raising $86 billion because it needs $86 billion to operate. It generated positive cash flow from its launch business years ago. It's raising $86 billion because the IPO is being used as a price discovery mechanism for a secondary sale. Early investors, including Alphabet, which put in $900 million in 2015, and various sovereign wealth funds that participated in later rounds, need an exit. The IPO creates the public market liquidity that lets those early investors sell. Goldman gets paid on the primary raise and on the secondary block trades that follow. The incentive structure points exactly one direction: make the valuation number as large as possible. This is not a conspiracy. It's just how IPO economics work. Google's 2004 IPO was priced at $85 a share. The banks thought it should be higher. The Dutch auction format they used actually kept the price somewhat honest. SpaceX is not doing a Dutch auction. It's doing a traditional book build, which means Goldman talks to its best clients, gauges demand, and sets a price. The clients Goldman talks to first are the ones who get the best allocation. The incentive for those clients is to express strong demand early, get a large allocation, and flip on the first day of trading. This is the part where I close the loop I opened at the start. The number that tells you everything is not $322 billion. It's $3. $2 billion. That's Goldman's own estimate for SpaceX AI revenue in 2025. Right now. This year. If you believe SpaceX's AI division is generating $3. $2 billion in revenue today. Ask yourself why you've never heard of a single major enterprise customer. Ask yourself where the case studies are. AWS publishes customer case studies obsessively because enterprise sales run on social proof. SpaceX's AI business has no public enterprise customers, no published case studies, and no disclosed SLAs. $3. $2 billion in enterprise software and compute revenue with zero visible customer evidence is a red flag sitting right at the foundation of the entire model. The actual SpaceX business, the rockets, the satellites, the Starship development is one of the most impressive engineering operations on Earth. Full stop. But the $1. 78 trillion valuation is not being sold on the rockets. It's being sold on an AI revenue hockey stick that Goldman itself can only share verbally because writing it down would invite too much scrutiny. If you're watching this and you're thinking about participating in the IPO, the question to ask your broker is simple. Show me the 3 largest enterprise AI customers SpaceX has signed. If they can't name them, you know what you're actually buying. Drop in the comments what you think SpaceX is actually worth on the numbers I walked through. I want to see how people are thinking about the Starlink multiple specifically, because that's where most of the disagreement is going to land. And if you haven't subscribed yet, do it because the next video I'm putting out covers the Starship commercial payload economics in detail, the per launch cost math, what it does to Boeing and Lockheed's launch businesses, and whether the reusability numbers Musk is claiming are physically achievable. That one is going to surprise you.
So before you put $1 near this IPO, ask one question. Name SpaceX's 3 biggest AI customers. If nobody can, you know what you're really buying. Drop your number in the comments and subscribe. The Starship cost breakdown is next.